You ever see the future coming? You see electric cars everywhere, you hear about green energy, and you just know it's the next big thing. But how do you actually invest in it? Well, today we're going to unpack a really cool solution to that exact problem. It's called the Smallcase Blueprint. Let's get into it. We've all been there, right? You see a massive trend on the horizon, maybe digital India, and you think, man, I got to get in on that. But then reality hits. Which companies do you pick? How many shares of each? Do you have the right mix? Suddenly, this great idea feels, well, like a giant, overwhelming headache.
And seriously, the old way of doing this is just a mess. You're trying to do research on one site, then you're hopping over to your brokerage app to place like a dozen different orders, and then you're probably trying to track the whole thing in a spreadsheet. It's not an exaggeration. It can literally take over 100 clicks to turn your big idea into an actual investment.
But what if it wasn't like that at all? What if you could invest in that whole green energy idea as easily as you make a Spotify playlist for a road trip? You just find the vibe you're looking for, hit play, and you're good to go.
Well, that's pretty much what a Smallcase is. It's a ready-made basket of stocks or ETFs, all professionally picked and bundled together around one single theme or strategy. It's the simple, elegant answer to all that complexity we were just talking about.
So here's the game plan for today. We'll start with how it simplifies investing in ideas. Then we'll dig into the really important stuff like ownership and control. We'll walk through how you actually get started, break down all the costs, put it head-to-head with mutual funds, and then, at the end, we'll figure out if it's actually a good fit for you. All right, let's kick things off with part 1, simplifying how you invest in big ideas. This is the core concept.
This really breaks it down, doesn't it? On the left, you've got the old way, buying stocks one by one by one. It's a puzzle. On the right, you've got the small case way. You invest in the whole idea, the entire basket, all in one shot. You stop being a stock picker and start being an idea backer. It's a totally different mindset.
And there are so many different kinds to choose from. You've got your thematic ones like green energy or EVs. You've got model-based ones that follow specific strategies like momentum or value investing. There are even goal-based ones for things like retirement. But here's the most important part. These aren't just thrown together randomly. They are all curated by CBI-registered professionals. That means there's a real expert behind the curtain.
Okay, moving on to section 2. This is where, for a lot of people, Smallcase becomes a real game changer. Let's talk about ownership, control, and transparency.
This quote right here, this is the key. You see, with a mutual fund, you don't actually own the shares of Reliance or TCS. You own units of the fund. But with a small case, the actual stocks, they land directly in your personal Demat account. They're yours, period. And that direct ownership leads to all these amazing benefits. First, you have total transparency. You can see every single stock you own, anytime. Second, when those companies pay dividends, the cash comes straight to your bank account, not the fund managers. Third, there's no lock-in period. You can sell whenever you want. And finally, you have complete control. The manager might suggest changes, a rebalance, but you get the final say on whether to approve it or not.
So we've covered the what and the why. Now let's get into the nitty-gritty, the how. How does this actually work from start to finish? Honestly, it's about as simple as it gets. Just 3 steps. First, you browse around and discover a small case that really clicks with you and your goals. Second, you connect your existing broker account. It works with all the big names like Zerida, Grow, and Upstocks. And finally, step 3, you invest. One click, you can either put in a lump sum or start a regular SIP. That's it.
All right, let's talk about the thing everyone wants to know, the costs. What are you actually going to pay for this?
So, if you're doing a one-time lump sum investment, there's a flat platform fee of 100 rupees plus GST. But, and this is a big but, that fee is capped at 1.5% of your investment. So if you're just starting out with a small amount, you'll actually pay less than $100. Now, if you're doing an SIP, it's even more affordable. The fee is just 10 rupees plus GST for each installment. And just like before, that's also capped at 1.5% of your SIP amount. So again, for smaller SIPs, the fee is tiny.
And this is huge. For 2 of the most common actions, rebalancing your portfolio to keep it on track and exiting your investment whenever you want, the Smallcase platform fee is 0, zilch. You'll still have your normal broker charges, but you pay nothing extra to Smallcase for those actions.
Now, just for full transparency, a couple of quick things. Some of the more premium, specialized small cases might have an extra subscription fee that goes to the manager. And of course, your regular brokerage charges and taxes like STT still apply.
That would happen anyway, even if you bought all the stocks yourself.
Okay, time for the main event. This is the question we get all the time. How does a small case really compare to a traditional mutual fund? Let's put them side by side.
This table just says it all, doesn't it? For ownership, it's direct stocks versus indirect units. For control, it's high versus low. You're in the driver's seat with a small case. For transparency, it's real-time versus waiting for a monthly report. And for costs, it's a clear, simple platform fee versus a bundled expense ratio that gets deducted over time. They're just two fundamentally different ways to invest.
So, after all of that, we land on the most important question of all. Is a small case actually the right choice for you?
You're probably going to love small cases if you're that do-it-yourself kind of investor. You know, someone who likes being in control, who wants to see exactly what they own. If you get excited about investing in big ideas, and you're comfortable with the normal ups and downs of the stock market, then yeah, this is probably right up your alley.
But hey, it's not for everyone, and that's okay. If you're a super conservative investor, or if you're looking for something with guaranteed returns, this ain't it. And if you want a totally hands-off, set it and forget it investment, or you know you won't bother with the rebalancing updates, then maybe other options would be a better fit.
At the end of the day, small case sits in this really interesting spot. It's not as intense as picking every single stock yourself, but it gives you way more control and transparency than just handing your money over to a mutual fund. So it all comes down to one simple question you have to ask yourself. How much of a co-pilot do you want to be on your own wealth creation journey?